Europe represents 32% of the global hotel supply and accounts for over 50% of global tourist flow each year, positioning Europe as a dominant player in the international hospitality market. The domestic European clientele remains a cornerstone of European tourism, representing approximately 80% of hotel guests, with a balanced distribution between the corporate and the leisure segments. However, this fast-paced tourist demand is facing a slower hotel pipeline. European hotel supply is growing at a slower pace than demand, putting pressure on the market. This imbalance between demand and supply intensifies competition between hotels, particularly in prime location, leading, as an example, to price pressure. Global demographic growth and the rise of international tourism. Over the past 25 years, the world has seen the birth of more than 2 billion individuals, most probably future global travelers. The World Tourism Organization expects an increase of 29% in international arrivals between 2024 and 2030. Europe has the highest density of labor force and a highly developed transportation infrastructure. 75% of hotel guests within Europe arrive via non-air transportation, primarily rail and road, underpinning the strategic importance of location with strong connectivity. The average hotel stay remains short, with a ratio of 1 per 2 guests per room and an average length of stay of 1.5 nights. Reinforce the momentum behind short stay and macro-mobility trends that are expecting to continue to reinforce occupancy. Despite growing demand, the hotel supply in Europe remains structurally limited. Land availability in city centers across the continent is clearly scarce, with regulatory constraints and policies aiming at limiting new development. Except for Spain, average hotel size across Europe remains modest: 36 rooms in France, 33 in Italy, and only 24 in the UK. This reflects not only fragmented ownership but also a stagnating pipeline. The number of hotels in France is static at approximately 18,000 over the past decade. While supply remains virtually flat, demand for accommodation outpaces it. Compared to the United States, considered as a mature market, Europe shows structurally higher and more resilient occupancy rates. Across economic cycle and geopolitical uncertainties, average occupancy in Europe consistently hovers around 70%, a particularly robust level that underscores the market's defensive profile and its attractiveness to long-term investors. Hotel is no longer merely just a place to sleep. It is the intersections between real estate and services. It now becomes a pivotal asset in the reinvention and revitalization of urban environments. A hotel is a secure place with an access 24 hours a day, 7 days a week, and 365 days a year. A hotel is an open, integrated space with a local community offering diversified range and of amenities such as co-working area, restaurant, retail outlets, cultural exhibition, and event venues. This multifunctional role enables hotels to have a broad and heterogeneous clientele, domestic and international travelers, business and leisure guests, as well as local residents. It is all anchored in an overwhelmingly urban footprint. As such, hotels are more and more seen as a strategic asset by local government, addressing critical issues such as the shortage of central urban accommodations, the need of infrastructure and services, and the wish of strengthening the city's attractiveness. Hotels actively contribute to the revitalization of urban centers, all within a regulatory context that prioritizes the reduction of land artificialization and the containment of urban development. In both 2023 and 2024, EXTENDAM has established itself as the most active hotel investment firm at the European level and the only French player ranked among the top 5. This pace of deployment is expected to remain robust throughout 2025. As of December 31, 2024, EXTENDAM's portfolio comprises 360 hotels representing 28,000 rooms and a total asset value of 4.5 billion. Since inception, the firm has executed 230 transactions and completed 92 exits, reflecting a sustained level of investment activity. In 2024 alone, EXTENDAM completed 15 acquisitions primarily outside of France and 24 disposals, averaging 3 transactions per month. From a geographical standpoint, the firm is currently invested across the Eurozone core markets, including the Iberian Peninsula, Italy, France, Germany, Belgium, and the Netherlands. While the current focus is on the Euro area, EXTENDAM continues to evaluate opportunities in it and beyond it, including in Austria, Greece, and the United Kingdom, with a foreign exchange risk taken into account and expected to be compensated appropriately. The portfolio is deliberately balanced between major metropolitan areas and mid-sized cities to ensure diversification and resilience. Approximately two-thirds of the portfolio operates under international brand through franchisor-franchisee agreements. Brand affiliation is pursued selectively where asset management analysis indicates that it enhances long-term value creation. In certain cases, EXTENDAM has acquired branded assets and repositioned them under independent management to optimize returns. The core of EXTENDAM investment strategy remains focused on economy, mid-scale, and upscale segment, typically 3, 4, and 5-star small hotels. These targeted segments are characterized by structurally high demand and greater asset liquidity. The firm deliberately excludes ultra-budget properties and luxury palaces.